Hey guys, thank you again for joining my channel. So I'm sure you guys have seen the recent news on GameStop, maybe Tesla or Bitcoin. So I'm sure everybody wants to jump in, install, I guess, a trading account on their phone as fast as possible and pretty much start making money. But the issue with this is most people just see somebody on the news who's really, I guess, educated when it comes to financial IQ, and they make it seem like it's quite easy, but in reality, it's a bit more to it. So, what normally happens, a lot of people just jump on the bandwagon, install an app, put their credit card on it, and they end up losing a lot of money because of it. So hopefully, I could spark a bit of interest for you guys when it comes to financial IQ and start working on a strong fundamental basis when it comes to your financial education. And then we could start going into actual investing. So let's split this video into four areas when it comes to financial IQ. So the first one I would classify as accounting, and accounting is the language of finances. Without accounting, you can't really understand if a company does well or didn't do that well that year, or if a company or investment actually makes sense based on its current financial situation. The second one would be, of course, investing, and this is pretty much all the research and work you need to put in to make sure an investment or a company actually makes sense. The third one is understanding the market. So this one is pretty much where you need to understand the current atmosphere in the market and pretty much try to predict where do you think this one is going. And the last one would be literally understanding the law, because it makes no sense to make all the money in the world on investments and then find out 2, 3, 4 years later that you are in big trouble with the government because you haven't paid your taxes or you haven't paid the right amount of taxes. And this was all because you weren't educated on the current laws. So, if finance was a country, I would say accounting would be its language. So, to start any investment, you guys need to understand and have a bit of knowledge on accounting. Don't mean you need to go in great details and study 10,000 coefficients that would give you a company's liability or assets, but at least you guys need to kind of understand some basic concepts when it comes to accounting. So, as in previous videos, when we discussed about assets and liabilities to a person, companies have the same items. So, a company has assets and a company has liabilities. And all of these you guys need to kind of study before making any type of investment. And of course, a company has a specific revenue and a company has a specific expense. So I think these four items you guys really need to put down on paper before you want to go into any investment. And then there are specific documents that each company releases each quarter for you guys to better understand their current situation. So, first of all, you could have an income statement. So, an income statement just shows how profitable is the company during a specific period of time. Then you have a balance sheet, and the balance sheet should give you what kind of assets and liabilities and even shareholders' equity in the company. And that will give you guys an indication of a rate of return of a company. And also, a company should give you their cash flow situation. And it's kind of, I think, named statement of cash flow. And this would give you a current understanding of how the company is transferring the money within itself. So I think a good rule, if you could see a company that makes profit and then a part of the profit reinvests in itself, that's a good indication that the company is going to do well, because first of all, it avoids taxes, because reinvesting profit in the company, of course, is a good and legal way to avoid taxes, and also lets the company grow. And also, if you can see if the company invests heavily into research and development, also is a good indicator that the company is having a long-term strategy. If a company tends to focus on giving all the profits to its shareholders and directors, and you see quite limited amount of effort to divert cash flow into actual development of its people or its assets, then I would kind of stay clear of that type of company. But again, this is the literature. You guys need to at least understand these four basic concepts. So, an asset for a company, a liability for a company, what is its revenue, and what type of expenses does the company have. And with the other three files, the income statement, balance sheet, and the statement of cash flow, this is where you could read all about those four elements and make a decision if you think this company is doing well and is going to do even better in the future. The next chapter is investing, and this one is quite straightforward, guys. It's all about finding that right deal, that right property, that right company. It's all about how much work you guys put in before pulling the trigger and actually buying it. Once you guys understand the accounting side of it, it's easy to kind of pinpoint if you think you want to go into a company or not, or if you want to buy a piece of land or real estate in an area or not. But with the accounting side managed in your head, then you just need to do the research. You just need to figure out where you want to go and what type of company or real estate or business do you want to invest in. And also, you would try to understand what type of tools you have at your disposal. When I'm talking about tools, is, for example, let's talk about real estate. Do you want to buy the property fully with your cash, or do you want to use a bank and leverage the bank to get more properties with the same amount of money as before? But then again, that increases the risk, but also increases the reward. And this goes for shares, for example. It's the same theory. You could take your $10 or buy a share, and if it goes up and down, you get the profit or the loss. Or you could start using CFD or margin calls and shorting. And this is all about understanding the ways of investing. So the first step, get your accounting in place, and then start understanding the tools you have at your disposal, and start researching as much as possible, because this is where the money is made, in the research, not when you press the button or to buy or to sell. If you get this right, most of your investments should be in a decent position. So the next one is understanding markets, and this is one of the most interesting items when it comes to investing and making money, and of course financial IQ. So I would split a good investment in two ways. The first one is understanding the best price to buy, and the second one is understanding if it's going to change. So we did the best price to buy in the investing section. And now in the understanding markets, we're going to discuss about this change. So a market could be either rising, falling, or stable. And there's money to be made in all these scenarios. But you guys need to understand where the market is currently and where is it going. So to give you guys a good example to understand this, imagine the 2008 market crash, right? We are maybe in 2011 or 2010, and the market is as low as possible. This is a prime scenario if you have some decent money put together to start buying, because this is the perfect moment in the market uh, where you should buy, because it's a buyer's market. So everybody's willing to sell their properties, and this is when you could get the best deals available. Then, probably moving 5 to 6 years, the amount of deals have decreased because, of course, people start figuring out this concept. They've been talking to a bunch of people. Maybe the news is saying that this is the best time to buy. Maybe some financial gurus, Wall Street Journal, whatever, they start publishing, again, this is the right time to buy. And as time goes on, prices go up, deals aren't that great and less in number. So let's say in 2016, in the same area where 5 years ago it was a good buyer's market because everybody was selling, now the prices have gone up and it's time to move on. It's a market where there's not much money to be made. So the best scenario now is to sell all your properties and move to a different market, maybe in a different country or a different area, to see if it's worth investing. So again, I need to reiterate this to you guys because it's a really awesome concept if you could master it. So money is made in the buying, not the selling, and money is made when you understand change. If you could combine both of these items, buying at the right time and understanding the change that's going to happen, you guys should be in a really awesome position to actually make money, because you don't want to be that person that learns about it and then invests right at the tail end of a movement and then it goes down. And the last one is understanding the law. And this is a clear-cut discussion. You guys, before making any investment or any decision when it comes to your financial future, you should always either buy a book when it comes to the topic at hand, or find a decent advisor in that area, and it will make all the difference in the world. So let's give you a really clear, simple example. You want to invest in a property. You already agreed with the bank how much money you need to put as a deposit. You already have it. You already have a tenant lined up because you want to get the positive cash flow in this rental apartment, so you're good. The bank says, okay, you got the deposit, you got the tenant. Let's say the mortgage is $900 per month. The tenant pays you $1,000 per month. $100 should be in a pocket, right? All good. Well, that's where the problem is. You never accounted for the tax and the tax laws in your country. And you might have a really unpleasant surprise later down the line when the government comes to collect your tax and you're going to be in a hole. And this is where you kind of need to understand this situation. I mean, you could either buy a book. I mean, this is an example of the corporate tax situation for 2021 in the UK. Clear to say, I haven't even managed to turn maybe even 1% from this book, and it feels sometimes like I'm reading a different language. But with this book and Google, it would provide me a good basis where to start. And then when I'm going to have a conversation with a tax advisor, at least I'll have a better understanding of what he's trying to convey to myself. But this is where the due diligence comes from. So again, this is the last and also not least when it comes to important news. Every time you create a financial situation for yourself, before pulling the trigger, before doing all your due diligence when it comes to accounting, investing, and understanding the market, once you've finished all of these, double check what's the current situation of the laws in your current state or country. It's all about tax. Understand tax law. And of course, I would definitely suggest finding a tax advisor that could help you guys navigate through this.